Joining us now to discuss BTC price and more is Rosh Singh, CEO, co-founder of crypto trading platform HODL. Hello there, Rosh. Thanks for joining us. So any chance for $100,000 Bitcoin by the end of the year?
Well, we believe so. Here at FutureBitcoinPrice, we cater primarily to retail traders. And what we're seeing is that Bitcoin's been around for over, it's approaching its 12-year anniversary in January. And we have plenty of data to analyze over the time that it's been around. And what the data indicates is that these cycles, these 4-year cycles, are beginning to be lengthened over time. So, in the first cycle, we had from bottom to top, it lasted about 230 days. The second cycle of 2013 bull market lasted about 700 days. 2017 bull run, from bottom to top, took about 1,100 days. And right now, in the fourth cycle, we're approaching about 1,100 days. And the general sentiment out there is that this cycle will be longer than others. And we're kind of seeing that with the double top that's forming. It's really a wedge that many are expecting Bitcoin to break out of. And we may see it continue well into the first half of 2022.
Rosh, I love your optimism. You believe that Bitcoin will reach $100,000 per Bitcoin by the end of the year. What will be the catalyst, and what kind of metrics are you looking that fuel that belief?
Well, not necessarily before the end of the year, but I do believe that first quarter of 2022, we will very likely see Bitcoin above 100,000.
And what do you think will be behind that? What will drive it up? What's the catalyst?
Well, so this 2021 has shown to be very different than previous cycles. There's a lot of institutional interest in the space. We have news coming out just today of Goldman Sachs potentially looking into Bitcoin bonds, similar to what El Salvador has done recently, issuing a $1 billion Bitcoin-backed bond. Typically in the past, when we had news that was somewhat negative about Bitcoin, it would go spiraling down. And this year, what we've seen is that it's unfazed by any kind of news coming out. We had the migration of mining out of China. U.S. now accounts for over 17% of the hash rate in mining. That was a brief blip, but if it was in 2017, I don't think Bitcoin would have recovered from that. And we're seeing a similar sort of strength that Bitcoin is showing that underscores that it's being traded much more heavily by institutional traders in this highly inflationary environment, and it's becoming much more accepted as a inflation hedge, as a store of value, as a safe haven asset. It is highly uncorrelated with other assets, so having even a small percentage of allocation in a portfolio could go a long way. But what we're also seeing is that retail interest in Bitcoin is beginning to decline. Here at FutureBitcoinPrice, where we cater primarily to retail traders, we've seen that between 2020 and 2021, there's been a significant decline in interest in trading BTC. It was around 38% in 2020, and now it accounts for less than 15%. So what's really happening is that this idea that Bitcoin will make you a multimillionaire is going away as it gets more institutionalized, as it becomes much more mature and stable over time. So retail traders are looking at altcoins, and there's these chain wars going on between Ethereum and other chains. There's obviously meme coins and NFTs. So retail traders are very much distracted by a lot of action that's happening away from Bitcoin, and we see that trend continuing.